Now, global stock markets have dropped sharply amid worries about an invasion of Ukraine by Russian forces, despite attempts by NATO countries to de-escalate tensions.
So what does that mean for our economy and the pound in your pocket? We go now to Guy Foster, who's come into the studio. Guy's the chief strategist at Brewin Dolphin, one of the UK's largest wealth management funds, so he knows about these things. Guy, a very good morning to you. How nervous are markets about Ukraine?
Well, Ukraine is one thing that the markets are nervous about, but it's not really been the primary driver of the weakness in markets since the beginning of the year. That's really been about inflation and interest rates. And often markets take a strangely sanguine view about these kind of geopolitical events, particularly military conflict. Often they perceive that it doesn't have as much economic impact as the man on the street would normally expect. The interesting thing about Ukraine, though, I think, is that it has the potential to spill into that sort of inflation story, particularly obviously because of the strong linkage between Russia and the energy markets and Ukraine as a conduit of energy from Russia and into Europe. So that's where the concern about an escalating conflict or standoff could be seen as contributing or intensifying the high energy prices, which I think we are all suffering from and frustrated by at the beginning of this year.
What's so interesting about this story is kind of the conflation of as you describe, a military story with an economic story. And I think ultimately a lot of people will be looking at this crisis and thinking the only solution to this is going to be economic sanctions, that money will be the way to try and solve this.
Yeah, I mean, the solution, I think, is largely as an attempt to kind of thread this needle of appearing to be firm but not antagonistic in relations with Russia, to make Russia feel that it has more to lose than it has to gain by taking these steps. And I think really that is the hope of those who are expecting that this will eventually sort of de-escalate, because both from Russia's perspective and from Europe's perspective, there's, for both parties, a lot more to lose than to gain from an intensification of the crisis, because obviously Russia will be able to sell less energy and its economy is in dire trouble, and Europe will be able to buy less energy, and obviously that's the thing that is in short supply at the moment.
European markets down nearly 4% yesterday. That's the lowest level since October. In London, FTSE 100 down 2.6 to a one-month low. That's its biggest fall in 2 months. Right, so for all of us here, in what ways we are not thinking of, in what ways we're not banking on? I mean, things like pensions hit, less obvious things. I mean, long-term, people sit and say, well, I've got my pension to look forward to or whatever. How could that be impacted based on results like this?
Well, I think you're absolutely right to call it out, because I think often people think of the stock market as sort of something that affects other people, something that affects hedge funds or the super rich. But obviously, increasingly, all of our retirement savings are determined to some extent based upon the performance of the stock market. I mean, what you tend to do as you approach retirement is reduce that reliance on the stock market, so reduce the risk of your pension savings, and normally a provider will do that for you. But ultimately, it is equities, the stock market assets that are growing wealth, that are enabling pension pots to grow and provide for people in their old age. Over time, over the time that most people are saving, you will have these kind of peaks and troughs. But obviously we've got many decades, centuries of evidence of stock markets reflecting economic growth, profitability and things like that, such that the underlying trend is a positive one, and that's why people are happy to entrust their savings to the stock market.
So essentially what's happening on that border, which seems a long way away, is bad news, whatever way you look at it. Where do you see this going with a sort of forecasting hat on? I mean, what do you think is going to happen in terms of things like inflation? Could we return to see it being affected globally, perhaps in the UK going up to, say, the 15% mark that we saw in the 90s?
Well, thanks for the easy question anyway. But I think
if you've got the answer to that, we'll all be listening and making notes.
Yeah, I mean, I think double-digit inflation seems a long way off at this stage. I mean, we do expect, obviously, inflation is expected to rise, really due to factors that are already have already been determined. So we know we have, particularly in the UK, this big utilities bill increase that's going to come through in April. But beyond that, I mean, ultimately, there will be. There may or may not be an escalation of this particular crisis, but it seems extremely unlikely that Russia would be in a position to do something that disrupts energy supplies on a lasting basis. And I suppose what most people are hoping for is that this is the shock that reminds Europe that it needs to diversify its energy needs to get away from reliance upon actors with whom we don't have a good faith relationship.
OK, Guy Foster, good to get you in. Thank you very much. Sorry for the difficult question. Very deftly handled. Thanks very much indeed.